Welcome to the Chart Smart training video, and in this video I'm going to take you through the exact roadmap that took me from an unprofitable trader to a profitable full-time trader who is now financially free, and I've been since the age of 23. This roadmap allowed me to purchase all my dream cars, allowed me to go on all my dream holidays, allowed me to buy properties by the age of 21 to set myself up further financially free. And the biggest thing it's done for me, which I cherish the most, is be able to pay off my parents' mortgage. So let's get straight into it. With trading, you do not want to overcomplicate anything. You want to keep things as simple as possible. You don't need all these trend lines, all these mad indicators on your charts, making everything look complex. You just need to utilize a proven strategy and follow fundamentals, which we teach inside Chart Smart Academy. This roadmap is also the same roadmap that our students have utilized to become funded and profitable, and now even looking to go full-time with trading. And I've got an example of this in this slideshow, and it's very well could be you if you did invest in yourself and give it a go properly. Now, I know you relate with the following because we've all been there and done it. Number one, you're so focused on the money, you end up chasing your losses instead of learning the actual skill of trading. Everybody gets into trading thinking it's a get-rich-quick scheme because that's how it's portrayed by these fools online. The reality is that it's not. It simply isn't. And when you start obsessing over the money aspect, that's when it becomes a vicious cycle. And like I said, you start chasing your losses and going down a downward spiral. Let's get that fixed for you. Number two, you're blowing accounts and failing funded accounts and evaluations. Obviously, they are different in how you trade them. So let's show you how you manage your risk. Let's show you how you manage trades when it comes from a live account to a funded account or a funded challenge, for example. Let us show you how to take control of those accounts and actually profit alongside us. Number three, you feel lost within your trading fundamentals. And this is basically what I'm trying to say by this is you're probably bouncing between strategy to strategy with no consistency within wanting to learn that actual strategy. And the biggest thing is you've probably not got somebody there to tell you, you know what, you're doing everything right. You simply just are going through a losing streak. That's just how the game goes. Sometimes you can have everything right, but you're going to lose trades. It's not 100% guaranteed to win all the time. Or the other aspect is you're doing things wrong and you haven't got somebody there to tell you, no, you're doing this wrong and this is why you're taking the losing trades. This is exactly what we do inside Chart Smart Academy. Number four, you've questioned whether trading full-time is sustainable. So obviously when you're doing all of the above, making all the mistakes I've mentioned, this is a very common question. You'll be asking yourself, oh, is this sustainable? Is this for me? The reality is that it is sustainable and your goal of becoming a full-time trader is more than realistic. Let us show you. You've more than likely taken random trades without any confluence and even removed your stop loss in the hopes that a trade comes back down and reverses in your direction. This could mean adding positions to your losing current position, i.e. sort of martingale. And then obviously you're thinking in your head, oh, you know what, if I keep adding positions, it's only got to come down a shorter distance, or it's only got to go back up a shorter distance before I can go back to break even and close out. The reality is you're probably not going to close out when you reach break even because you want to see some profits. You're thinking, oh, it's moving in my direction, so I'm going to hold it. Then it starts going back up to in the wrong direction for you, and you start removing your stop loss. Inside Chart Smart Academy, we will show you why a stop loss is an indicator for us that trade is no longer valid to take. So it stops these little habits. Number two, you have tried joining guru/furu signal groups and realized by doing so you've never grown as a trader. So the first thing I'll say on that is not only are these groups not profitable because all they care about is getting their commission for you signing up to their broker, but you never actually learn a proper proven strategy with the good fundamentals that you need to become a full-time trader. Number three, you've never stuck to one proven strategy and fundamentals consistently, changing strategy to strategy. So I did touch on this in the last slide, but like I said, this could be whether you're buying course on course on course, whether you're going to YouTube video to try and learn a strategy. And obviously, you're not actually sticking to that strategy consistently. But the reason you're not sticking to it is because, like I said, you've got nobody there to tell you you're doing things right and you're just going through a dry patch, or you're doing things wrong and this is what you need to change. But that's exactly what we'll do inside Chart Smart Academy. Like I said, we'll stick by you and show you what you're doing right and wrong. Number four, you've tried to utilize EAs or even paid somebody to pass the evaluation for you. Look, it's all well and good using these HFT bots or paying somebody to pass the challenge for you, right? You've got your funded account. What are you going to do then? You've got no strategy to trade the account with. Therefore, you probably end up going to blow the account and you've just wasted money again. Number five, risk your full balance or drawdown allowance on a single trade, i.e. you've gambled the account. Look, it's all well and good trying to chase that quick money, but it's not realistic at all in this game. you're probably better off just going on a roulette wheel and sticking it on red or black and spinning the wheel, and you probably have more luck than you would trying to gamble in the markets. But guess what? These are habits that many students had before joining Smart Chart Academy. One example here is Liam. Liam had all the bad habits that I mentioned previously. He had inconsistency in his strategy. He had bad risk management. He was unprofitable, like I said. And now Liam joined Smart Chart Academy, and now he is a funded, profitable trader, pulling profits from the market week in, week out, and is currently awaiting a payout from House of Leverage. But Liam is just one example of this. These are many other students that had these bad habits that joined Smart Academy. We got them out of their bad habits, and now they are making profits consistently, whether it be through their own trades, through the strategy that we've shown them, or whether they're doing it on the live calls with us, because we all do live calls together Monday to Friday, and we all trade together. So these are the students that are taking on board our roadmap and our proven strategy and putting it into play. So what will I actually be covering in this free training video? So the first thing we're going to cover is utilizing tools from SMC and ICT concepts, basically spotting imbalance zones, which we call FVGs. FVGs are simply just, like I said, imbalance zones where the market has impulsively moved in one direction. And we use that then as like sort of an area to come back down into, because we feel like the market needs to rebalance before pushing back in the direction that it needs to go. We will then look to take our entries around this FEG area and capitalize on these big bank movements. And this is how you mark them up, spot them and mark them up.
So now let me take you through FEGs and how we utilize them for our entry points and to spot them. So first of all, you identify your trend. In this scenario, we're in a very, very bullish trend. We've also got more FEGs around here, which we would look to revisit and mark them up as, like I said, FEG zones for the market to come down and play out into them. But FEG is basically an area of imbalance which we feel the market has to come back to before pushing and carrying on in the direction that it wants to go. So here's a perfect example. Like I said, we're in a bullish uptrend, but we look for the 3 candles structure with a clean gap. In this scenario, you've got your first candle, your second candle, which is a bit of an impulse move, broken structure, and then your third candle to confirm that that is an imbalance zone. What we then look to do is sort of wait for price to re-enter that zone, just like so. Let it play out a bit. And then obviously in this scenario, because we've got more imbalance underneath and we've got further FEGs down below, we wouldn't look to just instantly take this buy. Don't get me wrong, it could tap in and fly and carry on in the direction, but obviously what you want is some confirmations. Confirmations such as like rejections. So you want to see it sort of seeking signals like rejection candles or volume spikes within this zone. So, you know, a couple of rejections. If you can see that it's struggling to break the zone, then you could look to take your entry. So obviously here's your first rejection, second, third. You'd probably be thinking, right, I've got my fourth sort of rejection, potentially fifth. I'm going to look to take my entry now. You can see it's struggling to break the imbalance in the FEG, so it's telling us it's sort of filled it. You'd like to take your entry at the top of this FEG, setting your stop loss below the bottom of the FEG. If the candle's got a slight wick, just do it below the candle wick if you have to. In an ideal world, your target would be aiming for some sort of structure above. Obviously, we haven't got that marked on our charts for this example, but if there's like a 4-hour structure, a session high, or sort of liquidity to aim for, you could aim it there. In this scenario, I'll just put a 3RR because we know how this one plays out. And then, like I said, we've got some rejections, so you can confirm your entry from these rejections. Hammer candle, for example, and then leave the trade play out. So you would have taken this, you're now in the trade. We've rejected, we're on for a 3RR, and it's going to play out lovely. So like I said, an FEG is just basically an imbalance of the market. 3 bullish in this scenario if we're looking for buys. You always look for an FEG with the trend. So if we're in a bullish trend, we look for FEGs for the buy side, which we've got here. So we've got 1, 2, 3 bullish candles, leaving a gap within the market, which we would need to fill and balance before we keep pushing to the upside to continue our trend. So that's all an FVG is, and it's a perfect area for entry, as you can see in this example. Not only am I explaining it to you, I'm showing you examples. Obviously, if you want to see live examples, because we do live trading in the mentorship group, we take all these live with our students. We all profit together.
The second thing we will cover is manipulation within the market, showing how retail traders are used as liquidity. So probably a trader like yourself, how you're getting used as liquidity and how we avoid situations like that.
So let's go through this example on how banks will use retail traders as liquidity, and how we sort of know when the banks are going to manipulate and make sure we stay out the markets like retail traders would be entering. So yeah, in this example, we have your support zones and your resistance zones, just like you'd be very familiar with if you are a retail trader. And the other phrase which we will be using in this scenario would be your third tap, because I know full well as a retail trader you've heard of this term many times, whether it's taking entries off the third tap of your trend line, or whether it's taking the entries off the third tap of your support and resistance zone. So I'll play this candle out, this chart out, and then we will explain as we go. So you've got one tap of your support, two taps of your support, one tap of your resistance. Another thing I want to touch on as well, as retail traders, you will be, as a consolidation zone, you will have retail traders trying to buy from the bottom and sell from the top. So you've got both buyers and sellers trapped in one zone. So you've got your second tap of your resistance level. So now the buyers are waiting for their third tap at the bottom, and the sellers are waiting for their third tap at the top. Your third tap is in, buyers have entered the market. As soon as they enter the market, they are then liquidated. They've been taken out, stop hunted, and as you can see, market has retraced back up. And why is it retraced back up? Because it's about to take out the sellers who think they're running pretty, but it's about to take out the sellers just after taking out the buyers before moving in an impulse direction. I'm not just telling you this, I'm showing you an exact example. And obviously, if you do want to stop being tapped out, taken out as a retail trader, being used as liquidity, make sure you book that call. Make sure you get inside the educational mentorship group to make sure that you are avoiding situations like this. So let me keep playing this out. Buyers are taken out. Sellers have entered the market and instantly taken out as well. So one tap, two tap, one tap, two tap, third tap, sellers are in, thinking they're running pretty, buyers are in, stopped out straight away, manipulated, uses liquidity, adios. And then the sellers, which are running in up here, think they're running pretty, reality is they've just been liquidated as well. And now what's the market going to do? Move in an impulse direction to where it wants to go. So it's taking out your retail traders, your buyers and sellers. It's manipulated both and then shot up into the direction that the market wants to move without those guys being in. Liquidated them, used them as liquidity, and moved in the direction it wants to go.
The third thing we will cover is risk management, how to correctly use position size calculators to measure your risk percentage per trade. Risk management is something that I am massive on upon people joining ChartSmart Academy. We need to make sure we've nailed that risk management before actually getting into any live markets at all.
Now let's talk on risk management, because this is number one before you ever take any trades on a live account. You need to have this nailed down, and it's something we are massively passionate about within the ChartSmart Academy. So the first thing you need to understand is how to calculate risk. Obviously, we trade gold and gold only in ChartSmart, and it's slightly different to FX. So let's just use this example again earlier from the FVG video. So in regards to how you calculate your risk in percentage, you need to be on. You can use apps like FX calculator apps, but what I would just say for complete beginners, and so we have everybody in the academy on the same wavelength, is using my FX book. So you've got your currency pair, XAU, USD, account currency, whether it's GBP, USD, blah, blah, blah. Account size, let's say you're using 100k funded evaluation stage. Obviously, if you're using a demo, you could just put 100k demo or whatever your balance is. Let's just keep the number simple and pretend you're using $100,000 funded evaluation or funded account. Risk percentage is obviously dependent on your appetite. I'd never recommend using more than one. Obviously, it's completely up to you. I can't control you at that stage. What you want to risk, obviously, we can only advise and teach from our learning. And then obviously stop loss and pips. So with this example, you would want to be setting your stop loss obviously below the FEG. And then again, how this works on gold is, if you were to use EU or GU or Forex Pay, for example, this number 486 below my cursor, that is 48.6 pips. So you would then, if you were trading FX, go to your FX calculator and put in 48.6. With gold, it's calculated slightly different. So you literally, whatever number this is on your buy-in tool, your long position tool, you put that straight into the FX calculator on my FX book. So this example would be 486. And then you just simply click calculate. That would be telling you to use 2.06 lots to be risking 1%. And then your risk to reward scenario is a 3RR, which got hit, which means you're risking £1,000 on your 100k account to make £3,000.
But we don't just talk the talk. Like I've said, these are many students that had bad habits, like yourself, that joined Smart Academy, got out of these bad habits, and now are all consistently making profitable trades on their own or with us on the live calls, and reaping the rewards of investing in themselves and joining a real group. My guarantee to you is that I will guarantee you that within 10 weeks of joining Smart Academy, you will become a profitable and funded trader with the potential to take on trading full time. And if it doesn't happen, we will continue to work with you and spend extra one-to-one time with you to ensure we get you there. How am I so confident? Because this roadmap is the exact process that I personally took to allow me to become financially free through trading, and also the roadmap that backed up many of our students who are now profitable and funded traders within just 10 weeks joining Smart Academy. And these guys were all in your shoes before joining. Difference between them and you at this moment in time, obviously, the biggest action they took was booking a call with one of our team members, investing in themselves, joining a group of real traders that teach proven systems and solid fundamentals. So if you do want to make that change, you do want to start your journey on becoming a profitable, funded, even full-time trader, make sure you also take action and book that call in with our team. And I'll see you inside the Smart Academy very, very soon.